right, greetings. So we're back on, and let me give a shout out there because I believe if I in my brain did this right. Gus saying hello, Devontae saying hello, Trevor saying hello. So if you don't make it to a particular class, I can give you a specific shout out. All right. So 2-13. Let's take a look at this together. We have 2-13. We have Karen is a tax lawyer preparing a return for Charlie, who's in the business of buying and selling antiques. This is the first time Karen has handled his tax return. Among the deductions claimed by Charlie is a deduction for $30,000 loss from a fire that destroyed a storage bin where Charlie says he stored books and antiques. Charlie generally does business in cash, but has provided a list of antiques he said were destroyed and his recollection of their cost. Also, he says he spent $4,568 traveling to flea markets and like to buy and the like to buy and sell antiques. Can Cameron rely on this information in preparing his return? So, we've all met Charlies in our lives. Can you, should you, rely on what Charlie has to say? Is this the kind of thing? What do you do in this circumstance? And this guy's comes down to that regulation that I keep citing you to. So needless to say, it's a good regulation to make sure you print out. It's the one I sent you, Regulation 66, 94-1E1. I'll repeat, 66, 94-1E1. That a preparer may rely in good faith and without verification on information provided by the taxpayer unless it appears to be incorrect, incomplete, or inconsistent. All right? So the taxpayer can, excuse me, I should rephrase that. The tax return preparer can rely on this information as long as there's nothing to suggest. You do not have to cross-examine your own client. Remember, though, you should ask the client, in this case Charlie, Code Section 274D. You recall Code Section 162 and 274 are peanut butter and jelly, they go together. That Code Section 274, in this case 274D, requires substantiation, right, of travel and entertainment expenses. Remember, entertainment expenses are no longer deductible, so I have to just say travel expenses. Having said that, Karen should ask for substantiation of the travel expenses, and keep in mind that any estimate that you make should not be presented in a way that's misleading. So if you're making an estimate, don't take that estimate. Here he's estimating $30,000. Don't make that $31,568, okay? That would not be appropriate for you as a tax practitioner to try to reframe an estimate and try to project it as being an exact dollar amount. So the second part of the question says, can Karen rely on this information? If not, what should she do before preparing the return? I mean, in terms of due diligence, Karen should ask the taxpayer if he has any documentation to support that. And if he lacks that documentation, just warn of the consequences, right? That taxpayer has the burden of proof, right? To come forward initially with information. So the taxpayer has the initial burden of proof. And if you don't have any documentation, that burden of proof means in a civil action you're going to lose. Question B, same as A, except that Karen has been preparing Charlie's tax return for years and she knows he keeps meticulous detailed records of his business expenses. does that put you in a stronger position? Sure, right? I mean, in that case, you're in a far stronger position. And you can rely, you know, in that context, it's easier for you to rely on the taxpayer. I'm just glancing at Viva's watch. I just noticed, it looks, I saw people's watches, and watches these days do incredible things like tell you how many steps. And a friend of mine is a golfer, and I was so impressed. You guys may know that there's these so-called golf watches that will, if you wear it, will tell you exactly how far your ball is away from the hole, so that you can more accurately know what. So Viva, what does your watch do? It looks unique. I don't want to embarrass you, but I guess I just did.
So it's for my health record, everything. I can attend the phone, messages, email, I can check everything on my watch.
Okay, so that's the big dial, is that,
you can see everything.
You can see everything.
If my phone is like that way, and some email things I can check over here. I don't have to go to my phone.
Okay, just curious. What kind of app? It looks.
Samsung, yes.
Okay, so it's not like an Apple, but it's the version. It's the Samsung version of an Apple Watch.
Yeah.
Okay. Interesting. Problem 2-14. Alex graduated from college last spring. He's now working for a large financial institution in NYC. First paying job. Unsure of how to complete a tax return, Alex sought the assistance of Marie, a CPA, to prepare returns for several of Alex's friends at work. Marie assumes that Alex's return will be straightforward and does not ask Alex whether she has any interest in foreign financial accounts. Marie prepares and e-files a return for Alex, leaving the portion of the return that asks about foreign accounts. Alex is the granddaughter of a wealthy Parisian banker who has made substantial gifts to Alex since her birth. All these gifts are held in Alex's accounts at French banks. What did Marie do wrong? So, in this case, Viva, and then John, see if you agree with Viva.
First of all, he did not ask the questions.
She, right?
This
is.
Yeah, but she did not ask any questions regarding the tax return. Just she directly prepared without asking the tax return.
So, what provisions did she run afoul of, guys, here? Like, what are the flaws here? Like, what is her exposure here, guys? Like, you know, right, Brian, it's something we gotta come to grips with. Gotta know what our downside. So, Brian, as you're distilling this, seeing this, and John, you too, what do you see as the practitioner's downside here? What did, let me not sure, what did she screw up? And what trouble is she in?
Due diligence. And she didn't ask about the accounts.
So what kind of trouble will that get her into? And Omari, Kevin, what kind of trouble are we looking at? You should look at on the horizon.
Due diligence. She didn't exercise due diligence.
So what's her exposure? Just if you're advising her and you see this, when you get your papers, I'm going to be assigning, maybe next Saturday I'll hand out the paper topics, but if you saw this, and each one of you will have your own individualized problem, but if you saw this and I'm your supervisor, tell me what you see as the downside here, because is that what motivates us to not sip wine when we practice tax, but have Monster, right? John's got his Monster drink.
So Alex will be owes penalties now for not filing the F-bar. I mean, because Marie did not file the F-bars.
Okay, that's important. Okay, let's pause. Alex did not file her FBARs or so-called FinCINs now in,
Right.
in 2019. Because if you have control over accounts, right, you're supposed to file a disclosure that you have these offshore accounts, right? So that's one problem, right? So look, we know, everyone in this room knows, does she have exposure under 6694? Probably, right? She was pretty reckless in the way she prepared the return. But, so that's one, right, Brian? She's got potential IRS exposure. That may lead to, when we look at the Loving and Ridgely decision, may cause a referral to the Office of Professional Responsibility. Okay, so that's problematic. So she has a potential exposure under 6694, possible referral to the Office of Professional Responsibility. Then, and to me this is always more front and center, she has potential malpractice action that she's staring at, right? Because the client can always say, listen, I hired you as the professional. I didn't know, you're supposed to advise me, not the other way around. And if she gets hit with these penalties for failure to file, the taxpayer has her own accuracy related because she didn't file the FinCIN. What other form, if you get gifts, now we know, guys, help me out, make me feel good this morning. If you receive a gift, is that taxable income? No, John, you're saying, that's good, I'm feeling good, I'm feeling good. What's your authority?
706
What's your authority for the proposition that gifts are not subject to tax? People, were you looking?
1040.
101?
Close, me, +1 gives you what?
102.
102A. Code section 102A. You remember, guys? So she got all these gifts, right? Alex got all these gifts. They're not subject to tax. 102A. But the receipt of a gift from a foreign individual, you're supposed to file what's called a Form 3520. The U.S. government wants to know why you're getting these gifts. They want to keep track, right? So if you file this form, 3520, or you file for your client, there's no tax consequences, right? It's purely information. If you don't file, there's a penalty associated with the failure to file 25% of the amount of the gift. So that too can be very significant, right?
Is there a reporting requirement for dollar amount ones?
I don't know what it is offhand. I think the threshold, but John, you'll have to look at, I think it's $10,000 or something, but I'm not sure. Okay? I don't quote, I'm a,
Oh, it's 10.
But there is probably.
Per year.
Yeah, they do have.
does anyone logged in? Now, you piqued my curiosity. Can you just put in Form 3520 and maybe threshold and, for my, part of the reason I teach is always to educate myself. So I'm just curious what the filing threshold is to. But this is one that practitioners often miss. Anyone see that?
$100,000, more than $100,000 from a non-resident alien.
Okay, more than 100,000.
Or 16,076 from foreign corporations or partnerships.
Right. Point is, if one of your clients is getting significant gifts from abroad, you're supposed to follow this form. So, Brian, to get back to what's her downside exposure, I mean, once you screw up, guys, usually your screw up can result in many dimensions of potential liability. And the point is, when you work on your papers, for the moment, I'm going to have the honors of being your supervisor. So when you write this paper, you're going to be writing to me and explaining the downside, right? And try to remember when you're writing the paper, some of those little things I we spoke about last week about good writing style, okay? That you want to take into account. So anyway, those are some of the things. Yes, she has exposure. Problem 2-15. A 20-year-old college student with $6,000 of earned income and a 2-year-old daughter states she lives with her parents. She wants her daughter. She wants to treat her daughter as a qualifying child for purpose of the earned income tax credit. Anyone in this room? I don't do tax returns. Anyone here prepare tax returns where you've had the earned income tax credit, Viva?
Yes, but my CPA will not allow that one.
Oh, would it say that it's slowly?
He will not allow this.
Who's he?
My CPA. Actually, generally what happens.
I don't know what you mean he will not allow.
No.
Her boss.
Yeah, no. Actually, when we file the tax return, if suppose someone getting earned income credit, so we will tell them that IRS will send you that letter for that you can qualify for this much earned income credit. We have to fill up that form and then send to the IRS, and IRS issue the check for that.
Okay, so that's your procedure
Yes.
in the office.
Yes.
So what you're saying is, what must the preparer do before preparing the return for the student? So your response, Viva, is what? Anyone else? I'm just curious. V, you do?
I guess you have to confirm that the parents support more than 51%?
Well, is it the parents or the daughter?
The daughter is supported.
Supporting.
Oh,
And
God.
does she have much in the
So
way of
she
earned
wants to
income?
take the earned income tax credit, right?
She does.
The daughter. Well, she can't if she's living with her parents and her parents support all of them more than 51%, then the parents get it, right?
Right. In other words, on the face of it, this looks problematic, right? Because she's supposed to be supplying more than 50% of the needs of this child, but based on what she's earning, she probably doesn't. And there's a form, and Viva, you probably have seen this form. It's a form 8867, and
You have
you're
to answer all the questions for that.
right. You're supposed to answer all the questions to see if they qualify.
Yes.
Ping, you've done these forms too.
I think there's a package that will,
All right.
somewhere.
You have to fill up as soon as you get the child tax credit
Yeah, you
or
have
the student earning education credit, you have to fill up that form.
8867, right?
It's due diligence.
It's a due diligence form that you have to fill out on behalf of your client, or else you're being derelict in your duties. And that's the author's point in raising this, is that you run the risk, if you don't complete that form, of a 6694 penalty, right?
You cannot file
You cannot do E-file without that form. That's
Right, you need to do it,
Yeah.
or else you're not gonna get there. Okay, so it's a sine qua non, you need to fill out that form. Yeah.
And they mentioned penalty bottom of the form. Every year it is changing. Before that is $510 penalty. Right
Right.
now something changed every year.
All right, the point is, then, in this day and age, if you e-file, you can't do it, but if you filed paper file, you could without filling out the form, but you wouldn't, you can't do it.
So she, maybe dependent.
She may, but she probably doesn't qualify as a dependent, right? The point is, you gotta go through some, in terms of due diligence, and due diligence is important in terms of avoiding the 6694 penalty. You gotta make sure you have proper procedures in place, right? All right? So that's the author's point there. Valuation and estimates, in certain cases, particularly with respect to charitable deductions, as the authors point out in footnote 42, you're supposed to have a qualified appraisal done of the property. And if you look at the bottom of page 76, the last full paragraph, or the paragraph that goes from page 76 to 77, the last full sentence, I should say, on page 76, it says, the SSTS indicates that although specific disclosure that an estimate has been used as ordinarily not required, disclosure may be necessary in unusual circumstances to avoid misleading the IRS. So you don't have to disclose that it's an estimate. Sometimes it makes sense to, what I recommended is putting a footnote. You put the number down, put an asterisk, and then just convey that this is an estimate, it's not an actual number. I think, to me, the more forthcoming you can be, the less risk as a practitioner you have, the less risk as a taxpayer, I think, that you're going to be hit with penalties. On page 77, and this will get into the problem on the next page, the last full paragraph, it says, ordinarily, because the ethical limitations on a lawyer serving as a witness and advocate in the same proceeding, a lawyer who may later represent the taxpayer as an advocate against the IRS should refrain from serving as appraiser of the taxpayer's property. Okay? So if you think that you may subsequently have to serve as a witness, there's certain roles you may not want to play. And that gets us into problem 2-16. We have Harry is a lawyer and the owner of an art gallery. His friend, Tula, has donated a painting by an artist represented by Harry to the local museum. Harry believes the painting is worth $100,000. Assuming Harry is qualified to appraise the painting, he wants your advice whether he can appraise the painting for charitable contribution purposes, charge client a fee for the appraisal, and then prepare the tax return for which he will also charge a fee. Let me just tell you that, when I say tell you, this is something that transcends this particular problem. How many of you, if any of you, have ever engaged in a business transaction with your client? Any of you? And that's a good sign. No, you haven't. But there will be times where you might, for whatever reason, a client, I have a friend, truly a friend, not me, okay? I have a friend whose client was selling a gym, and they were good friends, and my friend bought the gym from the client, and what happened, like a year or two later, my friend gets hit with a lawsuit that the client thought that it was grossly undervalued and purchased for the wrong price, and complained that he thought that that his friend, the lawyer, was somehow simultaneously representing him. What's my point? Nothing good will ever come from any business transaction that you have with a client of yours, okay? So if at some point in your career there may be some transaction that looks very tempting, I can't say don't enter into it, but you must, if you do, insist that your client have some independent legal representation, all right? And don't think that your client, you know your client, and they'll never sue you. I mean, how many people walk down the aisle with their spouse and it's true love, but it isn't true love at the end of the day? So, you know, things happen in life that you just don't know and you can't account for. So be very hesitant, and if you do, my first message is don't. But if you have to, then you gotta put the proper procedure in place to try to protect yourself, all right? So, on page 78, we have this fact pattern. Should Harry, who wears many hats apparently, he's a lawyer, owns an art gallery, prepares tax returns, is he the best person to do an appraisal here and prepare the tax return? And the author's point here is that you shouldn't, when you're dealing with clients on a particular transaction, wear simultaneous hats. In the ideal world, if he's truly qualified to be an art appraiser, do the art appraisal, then let someone else prepare the return and just make sure the appraisal is properly handled. Or, if he wants to prepare the tax return, let someone else prepare the appraisal so he can function and just make sure the appraisal is properly done. But when you wear both hats, you can create self-fulfilling destinies so that it may produce or yield an outcome that's not beneficial for the taxpayer. So for your notes, generally, this is not a good idea. Should shy away from it. The lawyer's rules are found in Model Rule 3.7. If you Google Model Rule 3.7, it specifically prohibits an attorney from acting as an advocate in a trial in which the attorney is likely to be a necessary witness. So you can't act as an advocate where you're also going to be called as a witness. That's again Model Rule 3.7. And I will just call to your attention, and this extends for accountants as well, but here for lawyers it's directly spelled out, it's Model Rule 1.8, that if you want to enter into a transaction with a client, Model Rule 1.8 says the transaction must be fair and reasonable, the client must be advised in writing to seek other counsel, and the client must give and sign informed consent. I'll repeat, this is Model Rule 1.8, that a transaction must be fair and reasonable. The client must be advised in writing to seek other counsel. And third, the client must give and sign informed consent. All right, beginning on page 78, 79 is a discussion we already spoke about the issue of errors and amended returns. And I spoke to you about the fact, and you'll see it in footnote 45. Footnote 45 gives you two cites to two regulations about taxpayers should file an amended return. It does not use the word shall. Everyone see that? Footnote 45. If you recall from last class, but now you have a citation, I mentioned the U.S. Supreme Court issued a decision in Bataraco. That's the case mentioned right in footnote 45. It's also mentioned in footnote 47. You see Bataraco? That when you file a return, that is your return. The amended return can help you cleanse it, but it can't negate the first return you file. The first return you file is the return. So if you file a fraudulent return the first go-around, and you recall that the statute of limitations under Code Section 6501 for fraudulent return, there is no statute of limitations. You cannot then file a clean return to commence the statute of limitations. So these are some things that, again, guys, these are, in my opinion, when you go out there and you're practicing, whether you're already practicing or you're going to begin practice, some of these things you really have to bring with you to the table. These are precepts that have been in existence ever since I started practice. Unless there's a major policy change, I don't see this changing. I mean, you might say, you know what, the country's going to be desperate for revenue. I can see Congress mandating that amended returns, if you find a mistake, you must, not you should, you must file amended returns. Now, would that generate revenue or not? If you had, instead of the word should, must. What's your reaction?
Not.
Well, just your gut reaction, like, suppose you say, you know what, this is stupid. People find mistakes, and largely the mistakes, I'm gonna make up what I think is true, largely the mistakes are against the government's interest. In other words, when taxpayers make a mistake and tax practitioners, generally, it's more in favor of themselves or their clients, right? Because that's how our brains operate. And we know if it isn't, we are gonna fix the return, right? But suppose you had a rule that said you had to file amended returns. Do you think that would be good or bad public policy? Why bad?
One, it's gonna take the government more time to process that, it's gonna cost them money to go through and do it.
But hold on, but if people do follow that mandate, there's revenue to be found there.
I don't know if that's gonna offset the expense of it though.
What's the expense?
More processing time, more people, more
More
regulation.
processing time and people. I mean, let's face it, I'm gonna state something, I don't know, if most of the returns are done electronically. I mean, there's no, not like anyone has the key punch in the entry or things like that. So I'm not sure administratively it's gonna cost more.
That man, you have to mail, you cannot do the electronic.
I know, look, the
Someplace.
taxpayer's gonna have to spend an extra $3 on postage. But I'm talking from the perspective of Congress, not the taxpayer's perspective. Would this be good public policy to mandate amended returns? John, you're gonna say?
No, I was gonna talk about the taxpayer, from the taxpayer's perspective.
Okay, talk from the taxpayers.
I was gonna say, they also have to, if it's a minimal difference, then they'd have to pay someone to re-prepare.
I mean, we could have a rule that say you must, if the tax liability discovered is in excess of, make it up, $1,000. In that circumstance, you must file an amended return. Kevin?
I believe that it would be in favor of the government, so yes, I would do that.
So you say that would be good public policy,
Yes,
right?
for the
Okay.
government.
For the government. So in a world in which we did, what's the deficit running? Part of me doesn't want to believe this, but was our deficit last year just in 2018 alone?
Just shy of $1 billion.
How much?
Or just shy of $1 trillion.
Just for the year. Like it was $1 trillion just for the year.
779 billion.
Yeah. This year it's gonna hit $1 trillion.
779 billion just for 1 year.
It rose to 779 billion in 2018. So in 2018 it was 779 billion.
Okay, for just 1 year.
Yeah.
And it was 17% higher than 2017.
Okay, and then 20, I think is John's, it's gonna be higher. So from Kevin's perspective is, we should do this because it will bring in more revenue, right? Now, the question is, would it? Now, here's the contrary. If taxpayers who, in a day and age of the internet information, taxpayers are much savvier than they were in yesteryear, right? So they will know that tax practitioners would be legally obligated to file amended returns, and that if you didn't let them, that they probably should drop you as a client, right? Because now there's a mandate, and if right now, what happens if a client doesn't listen to you and you say, to your client, you should file a return, and they don't listen? You're supposed to withdraw from representation.
You don't have to.
You don't have to, right? Everyone agree? But if there was a requirement, you would really think about, or should think about withdrawing. And if the client found an error, would that client be willing to talk to you about it, about the pros and cons of submitting an amended return? Would they be more inclined to try to potentially not tell you, right? because, see, by having the word should, you're in a position where the client can tell you, or you can try to coax the client about why he, she, or it should do it, right? Where the philosophy may really change in an environment where it's mandated. So anyway, why am I telling you this? That these are the kind of things, guys, you guys should really know, because in my opinion, this rule is not changing anytime soon. That the Badaracco precept, or this should, but not must. So just take these things into practice with you. Page 79, this problem 2-17, your client with whom you've implemented various transactions and provided tax advice over several years consults you on a reporting position with regard to a transaction. You advise your client that the transaction must be reported as income tax return in a certain way. Later, your client sends you a copy of the return as filed for your records, and you notice the client did not report the transaction as you advised. Uh-oh. When you raise the issue with your client, he tells you that he got a second opinion that was contrary to your advice. How should you respond? Presumably, you still think your position is correct. So, B, you were going to say something?
Yeah, you documented, inform the client that you do not think that this was a reasonable position or a good position to take. And if the client ends up in trouble, you've covered your back.
Do you have to, I mean, you may also want to advise your client, you may, depending on its nature, there may be criminal issues involved, may be criminal issues. So you certainly want to advise your client as to that. And I will say, you may want to withdraw from representation. And can I say parenthetically, if you're strong, probably should, because this sounds to me, this is a cowboy kind of client and a client that is on loan. There's certain clients that you know you're not going to have for a long time, and they're just going to be with you for a while, and then they're going to move on, and your subsequent advisor to win them over may point out, are you guys guilty of this, where you want to get a client, so you want to point out, or you seek to point out all the flaws of your predecessor, and then your client may be juiced up and saying, oh, I missed that deduction, or he or she missed those deductions, there's some malpracticing. So all I'm saying is, these kind of clients who are very aggressive, they may end up being your worst nightmare. So the response to 2-17, B's right on point. You've got to document that you think this is an error, you recommended filing an amended return, but you should consider withdrawing from subsequent representation of this client. All right, that begins page 80. And page 80 and the material that follows raises, without resolving, because this issue has not been resolved, but in some ways I think it has, because we have these two cases, and they're pretty compelling, whether you like or not, like Brett Kavanaugh. It's funny seeing his name here, because I never put the connection together. And I will say this about Anthony Scalia and some other opinion writers that I may not share their political philosophy, but they're gifted writers and they can write compelling opinions. The question, or the bigger question the authors raise in this section that these next two cases are going to address, Circular 230 was recrafted in 2011. Why was it recrafted in 2011? Because the IRS felt that tax return preparers were doing, many of them, were doing a grave disservice to the country. And they were ill-prepared to file and prepare tax returns. The returns that were being prepared were flawed in many respects, in that Treasury Department had to have oversight over these practitioners. And that was good, by the way, if you don't mind me saying, for people like yourselves in this room, because it was trying to get rid of the bad apples, and the bad apples, by not being able to participate, people would have to up the game and hire more skilled practitioners like yourself. So, in my opinion, the CPAs and attorneys and accountants of the world should have applauded the effort by the Treasury Department to rein in rogue tax return preparers. So they did. When I say they did, Treasury Department promulgates regulations in 2011 in the aftermath of studies that show how problematic gatekeepers are of people's tax returns. And small business, does small business get allowed here in Congress and by lobbyist groups? Sure. Small business, Congress, however it's an amorphous term, small businesses, but mom and pop stores that were preparing tax returns obviously felt very threatened by these Treasury regulations, because it added a burden on their part that they had to take continuing education courses, they had to pay a registration fee, all sorts of things that they would prefer not to endure as small businesses is perceived as, regulations gone awry on the part of the Treasury Department. So I don't recall, there were some articles about this. They got sponsored by conservative groups to bring a case challenging these regulations. Now, when you have where you're going to challenge a government, and let me just say, are government regulations easy or hard to challenge? Treasury regulations in general. What do we know?
Hard.
Very hard. The standard is very high. If you remember from your income tax course, in the decision written by Justice Roberts, right, the current Supreme Court Justice, Mayo Foundation is the name of the case. And in Mayo Foundation, the court essentially said, if the statute was clear, you had to honor the statute. If the statute was somewhat ambiguous, that the regulation written by whatever administrative agency is not arbitrary and capricious. It's not arbitrary. That it should be granted deference, right? That as long as a regulation was not arbitrary and capricious, it should be granted deference. So that's it's pretty hard to challenge and say a particular regulation was arbitrary and capricious. And by the way, this cuts across political lines. There are liberal groups that sponsor cases, particularly in the area of LGBT rights, right? They're going to sponsor cases. I forget, liberal groups sponsored, I think, I don't, something rings my, a gay Boy Scout trying to join the Boy Scouts and sponsored a case saying that he should be able to join. Well, by the same token, conservative groups wanted to bring a case challenging these regulations. And you as the group, and you're going to put, getting the right lawyers for this, hundreds of thousands of dollars. So you want to make sure your test case is your best foot forward, right? And it may, in some instances, start with a name. Do you think it was any accident that the name in this case is Loving? Who wants to rule against Loving, right? Do you want to be in favor of Loving or against Loving? All right? So there's no doubt that the conservative groups, they had probably, literally 1,000 different potential plaintiffs they could use, but they found, I think it was Ms. Loving was her name. We're getting an excerpt from the case, but I'm pretty sure that there's a woman whose last name is Loving.
Karen?
Karen Loving is her?
I'm saying that you agree with it for the case that she's a Karen loving person.
Karen. Okay, gotcha. Yes, even better. All right. Anyway, so I'm just letting you know, if you do a little research on the history of the Loving decision, I'm sure Wikipedia we'll give you a background of which group sponsored it. And then, again, it was very strategic, all right? And maybe it was strategically brought in front of Brett Kavanaugh, meaning in this particular, it wasn't brought at the Ninth Circuit, right? It was brought here at the DC Circuit, which is very well known, and you're going to challenge these regulations. Brett Kavanaugh points out that gets back to the statute that started Circular 230. This is in the third full paragraph. It talks about, as a statutory authority for the new regulations, the IRS relied on Title 31 USC Section 330. That's in the back of our book, and it's also something I distributed to you. And I told you, this dates back to the Civil War, right? To the Civil War. Because Congress was concerned that people would, for Civil War reparations, that they would make false claims, right? So they wanted to make sure if you were bringing a case to be made whole, that the right people brought it. On page 82, there's a discussion of Title 31, Section 330, of just the language itself. Now, let me ask you, and Brett Kavanaugh answers this question. When Congress enacted this statute that regulated practice before the IRS, this is Title 31, Section 330, could the intent back in 1884 have ever been towards tax return preparers? And you know the answer to that question. Could it ever have been intended on the part of the Congress to affect tax return preparers? And the answer is no. Why not? Mario?
Assisted and not represented.
No. Well, before we get into the regulatory side and things like that, why could this not have, in 1884, the intention of impacting tax return preparers?
Because
There were no tax return preparers because there was no income tax until what year? 1913. Thank you. Come on, guys, a little factoid for tonight over dinner. By the way, speaking of dinner tonight, I don't know, someone keeps telling me, maybe I said this last class, how many of you have seen, by your show of hands, I'm going to missay it, Bird Nest? Is that the name?
Bird Box.
Bird Box.
I watched it last night. It was terrible.
Terrible!
Yes. No, it is very gripping. It's a very gripping movie. It draws you in and it holds you in. But there's no story. The story is stupid. It's the stupidest story ever. And while I was watching it, I'm like, why am I watching this shit? Because it's so gripping. So,
All right, so, but
There is no
if you don't mind me
conclusion to
saying,
that.
if it's
That's the
gripping,
rating. Yeah, but it's
it must be effective as a movie.
No, it's a good movie. There's
It's
a
a
lot of
good movie.
unanswered questions.
Yes.
Yes.
It's intentionally ambiguous.
it's gripping without a good storyline. They draw the viewer in by sound, by visuals and stuff like that. But and they just keep the viewer on like on the edge of the seat. But the story is but you gotta have a good story. You gotta have a good script, and there's nothing to it, honestly.
The only thing that's good about the movie is Sandra Bullock.
Yeah,
That's the
Sandra
only thing
Bullock
that's
is
actually
good.
good.
But how ridiculous is this end of the world story? I don't know. It's just
All right,
That's the
maybe
nature
I'll
of
have to
the
see
world
it, so
stories.
I don't know, I have to get, and I think there's a new policy, I also saw as I'm saying this. My daughter has a friend who has a Netflix account, and I think they're really,
cracking down.
cracking down on people using other people's Netflix account.
Yeah.
So,
Because you can track IP addresses and
something like
yeah.
that, so, I don't know if
They
I,
have a 5 license.
I don't know if I can.
Yeah, you can share it with certain users. Like my son will use it, but yeah, you have to have a number of users. And he's like 250 miles away, but
All right, beyond my pay grade, but, all right, how we got from, Loving to Brett Basket, was it?
Bird
Bird
box.
box.
Bird
Bird
box.
box.
Bird box. Bird box.
Bird box.
I'm not sure, but my brain works in strange ways. So 1913, I'm trying to give you some good conversation over dinner tonight. 1913 income tax comes into being vis-a-vis John the 16th Amendment to the Constitution. Okay, so that's really some confusion. So we didn't, certainly the intent when Congress passes this law was not to rein in, grow tax return preparers. There was no such thing. So back when, Congress could never have even imagined what was to come. So I'm just giving that color because I think that's important. So Brett, on page 84, describes the requirements of this new regulation. In the third paragraph, he talks about 2011, in 2011 about the new regulations requiring an exam in continuing education. District court shoots this down, okay? So this is at the appeals court, right, guys? So at the district court level, Loving won, because we know who wants to rule against Loving, right?
It's Sabina Loving.
Sabina Loving.
Sabina.
John Trevino and Elma.
Loving's first name was Sabina.
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 Sabina. Sabina.
Loving.
Yeah.
Sabina.
Loving. Yeah.
Okay.
There are 3 tax preparers who the case won.
Right, there's 3 tax.
John, second is John.
Right.
Sorry for the wrong.
But Loving has the most attractive name, so we're gonna put that name first, right, guys? If you're strategic. And correct me if I'm wrong, I didn't see this movie, maybe some of you saw it. Wasn't there a movie about, the last name was Loving, about a black and white couple?
Yeah.
And,
Virginia, right?
say
Yes,
again?
that was starting with M. I can't remember what,
He was illegal to get married.
Loving.
Yeah, but then, I think the last name there was Loving too.
Loving.
Yes.
And the
And,
movie is Loving.
It was a biracial couple.
Mildred.
And in whatever state that was
Mhm.
not considered acceptable.
Yeah. Mildred Loving.
Right. Our country is not the cleanest history, let's put it that way. Page 83, we have Mayo Foundation, that, well, this case points out the Chevron case, which is very similar to the Mayo Foundation. But Brett, Brett refers to Brett Kavanaugh, just so those who are following my logic. Well, we're on a first name basis. Brett doesn't know I exist, but I can call him Brett. Okay? Brett has 6 considerations he has here, because, look, judges don't like to be reversed. If this went to the Supreme Court, he wants to have one reason, well, it can be overturned. You have 2 reasons, makes it harder to overturn. But if you have 6 reasons, makes it, he's trying to build a case that makes it virtually impossible to overturn. So he's going to offer 6 reasons why he thinks he's correct that these regulations are not permissible. So starts off with the meaning, because if you look at the statute now, let me see if I can quickly find this, because you guys pointed out, even though I Xeroxed it, on page 318, everyone have page 318? In your textbook, page 318 is the statute. This is the statute that opened the doors to the promulgation of Circular 230. And if you look at the section 330A, subject to section 500 of Title V, which we're going to ignore for the moment, the Secretary of State may regulate the practice of representatives of persons before the Department of the Treasury. Regulate the practice of representatives before the Department of the Treasury. So we're dealing with representatives, right? Everyone agree? So who are so keep your hand on that page, and then we'll turn back to page 83. are tax return preparers representatives?
No.
Okay, you say that, no equivocation in your voice, because they don't seem to be representing the taxpayer, right? They are not agents. They are someone who assists the taxpayer. They do not represent in the process of preparing a tax return. Keep in mind the visual. In 1884, people were really coming before the Department of Treasury asking to be compensated for the loss of their horses. There was real exchanges between your representative and the Department of Treasury, right? So that was not what, at least in Brett Kavanaugh's mind, that was not what was going on. And it talks about, so we don't seem to be, we seem to be missing out on the word representative. 2, spelled out on page 84, the word practice. What is the word practice before the Department of Treasury? What does that mean, practice before? And when you look at this, it's practice before. It's not clear that preparing a tax return is before the Department of Treasury. Before the Department of Treasury connotes like a visual that you're actually doing something in front of, right? The word before means in front of. You don't seem to measure up in that case. Also, it says, and this gets back to the statute, which again you can turn back with your hand. In presenting their cases, there seems to be this notion that you're presenting a case. Well, is tax return preparation, do you consider that presenting a case? Now, you could see it like you're presenting a taxpayer's, the case of what income and deductions they have, but it's not traditionally thought of as a case, right, when you prepare a tax return. I just, in case you think I'm missing something, which is fine, I'm sure people have thought worse of me, the second full paragraph on page 86 talks about a little bit about the history of this section about horses and other property lost in military services. So it does give us a little bit of a historical context. Point 3 just affirms what I was saying before, that the original language plainly would not encompass tax return preparers because there were no tax return preparers. It goes on that Congress revamped the statute in 1982, and at least in Brett Kavanaugh's mind, contemplates representation in a contested proceeding. And when you file a tax return, at least when you file initially, there's no contested proceeding, right? Everyone agree? There's no contested proceeding. Item 4 talks about, it's a broader statutory framework, and so what Brett Kavanaugh is trying to say in item 4 is, let's look at the entire picture, because by looking at the entire picture, we can get a better idea of what this particular statute was designed to address. So Brett, in fairness to him, wants to look at the entire forest and figure out, hey, once we look at the entire forest, how do you interpret the shape of this branch? Does it make sense? So he's saying that in the first full paragraph on page 87, that when Congress wants to regulate, when Congress wants to regulate tax return preparers, guess what? It knows how to do it, right? How do I know it knows how to do it? It's done it. And there's several code sections that specifically say tax return preparer, right? We saw the best evidence we've seen of this is code section 6694, right, that we just dealt with, and 6695. So Congress, when it wants to go down this path, knows. Why would Congress, who, as a political body which knows how to address tax return preparers, why was it silent when it came to Section 330? Maybe they didn't want to address tax return preparers in that context, right? Fair statement, Brett? You got us on that, right? Like, Congress knows how to deal with it, and when it wants to, it does, and it did it. And, like, Congress has statutory rules about what penalties should apply, right? We know, again, Code Section 6694. Is Treasury in the position to create, Treasury is not an elected body, everyone agree? Should it be in a position to create its own penalty regime? And Brett says, doesn't seem to make sense. If Congress wanted to, it could, it didn't. Item 5. Fifth is the nature and scope of authority being claimed by the IRS. And Brett says, gee, in the next paragraph, all of a sudden, where tax return preparers were not within the scope and domain of the Treasury Department, right? Since 1884, for over 100 years plus, tax return preparers were not within the scope. All of a sudden, the Treasury Department writes regulations, and we have $600,000–700,000 worth of tax return preparers, right? That all of a sudden have to heed the advice of the Treasury Department. Now that's a pretty significant number, right? And when it comes to a number that significant, chances are you want your elected bodies to do that, right? Not the bureaucrats in the Treasury Department to unilaterally do that. So he's questioning whether or not, was there anything on the part of Congress? Sometimes Congress really does say to an administrative agency, you take the ball off the field from here. They give clear directions. Congress doesn't want to handle it. Administrative department, you take care of it. I mean, a lot of that, I think, I'm not an expert in this area, comes in the Clean Water, in the Clean Water Act and some other far-reaching environmental legislation where I think the statutes gave a lot more license to the administrative agency. But that doesn't seem to be the case with the Treasury Department. And then finally, item 6, Brett's trying to seal the deal here and not get reversed at the Supreme Court level, says that the history of interpretation here suggests that that the statute be read in this more narrow fashion. That they've done this, again, there's 100 years worth of plus of history. Never before was this considered applicable to tax return preparers. It's a stretch to think of it now. So, says that these regulations, as they apply to, and remember, Ms. Loving was not a CPA, she was not an attorney, she was not one of the people traditionally you think of within the confines of Circular 230. And the case is ruled in her favor. Thoughts? Anyone have any thoughts about this?
The IRS had to cut a big check.
Why do you think the IRS had to cut a big check? Just tell me.
They had to refund every single P10 fee they ever charged.
They have not done that yet. No, and that's a different case. That's mentioned. That's the Steele case. Let me see if I can quickly find that for you. So far to date, the only thing they've done is suspend. They've not said that that fee has to be reimbursed. Because I want to find it, I'm not going to find it right away. But that case is still pending. I think it's STEELE, Steele v. Commissioner. So the P10 is on hold for now.
They estimate it to be like $300 million.
Could be big bucks. Enough to build a wall? No, not quite.
Do something nice with it.
Any other thoughts about the Loving decision? I will give Brett Kavanaugh credit. I mean, it's an easy decision to read. There's, it's not written in jargony, hard to read prose. So, kudos to him to write a decision that's eloquent.
I just love the fact that he gave 6 explicit reasons that virtually nobody can say, well, this is ambiguous or this doesn't cover certain elements. He tries to cover everything, and that's what I enjoy most about it.
Yeah, and it wasn't, I don't know how much, remember, we're getting an excerpt of the opinion. When I say an excerpt, I don't know how much was cut, but I can appreciate that it wasn't a 100-page opinion. And it looks like, I don't know how much was cut out, but I can appreciate opinions that don't go on for 100 pages. All right, so the IRS, in the aftermath of being shot down on page 88, announces an annual filing season program to try to, again, give practitioners who want to comply the ability to offer this, to be able to say to their clients that they are part of this IRS program. So it's a voluntary program that's out there. Just call that to your attention. The AICPA has challenged that, and at least for now, they lost the initial round. We have Ridgely v. Liu. You might say, who is Liu? He was, under Obama, the Secretary of Treasury, okay? I don't know, and so instead of suing the commissioner in the Ridgely decision, suing the Secretary of Treasury. All right? And here, if you turn to Appendix A, and look at 10-10.27. Talks about the fact that you can't charge a contingent fee on an original return. Everyone see that? Can't charge a contingent fee on an original return. 10.27. But I turn to page 433 for a second, if you could. Page 433. See this? The AICPA prohibits a CPA from charging the contingent fee, right?
What's meant by contingent?
Like, I'll prepare a return, and if I get a refund, for every dollar refund, I get 1/3. So my fee is dependent on the larger the refund, the bigger my fee on an original return. Now, this prohibits. Does that raise any question? What was the Ridgely opinion about, guys? Do you remember? What was factually going on here? know? Wasn't this a tax practitioner, a CPA, by the way, not like Loving. Loving had no particular, to my knowledge, qualifications, right? But here we have a real CPA, like most of you. And what was, admittedly, Ridgely does not sound like Loving, right? So, but remember, Ridgely's presumably bringing this case on his own, so it's not being sponsored by a liberal or conservative group. So we don't have to look for the right name. What was Ridgely challenging? You recall? Say again? What do you got?
The refund,
Well,
whatever he needs to refund or.
himself or someone else? What was going on? Wasn't this a practitioner who said, look, you're cramping my style. I want to charge a contingent fee for preparing people's tax returns. And guess what? Treasury Department, get old. You can't regulate me because Circular 230 doesn't apply to me. So hold on, so you get this visual? Ridgely is saying to the Department of Treasury, you can't touch me because Circular 230, I'm just a tax, yes, I'm a CPA, but I prepare tax returns and you can't regulate how I prepare tax returns. What does my fee have to do with when you read Circular 230, excuse me, when you read Section 330, the enabling statute? I'm not representing anyone before the IRS, I'm just charging a fee. You know, this is an extension of the Loving case. Like when you think, I'm preparing returns, there's no regulation of me. Congress doesn't allow Treasury Department, you can't regulate me, right? Everyone understand where this practitioner is coming from? Does he make sense? After reading the Loving case, can you use a lot of what Brett had to say and apply it in this context? Or not?
That was one of the things he brought up various times in the case, that it was, in a sense, something compared to Loving.
I don't know what you mean by the word innocence.
That there were similar things in the Loving case.
Look, if you're no secret when it comes to litigation, if you're a taxpayer and you want to prevail against the Treasury Department, and the Loving case is there, the more you can say you share similarities with the Loving case, the greater the chance you'll prevail, right? Because courts say, you know, they like to honor this concept of stare decisis, of where if the prior court said something, this court should adhere to that. All right, does it? Okay, keeping in mind, Ridgely's stamping up and down and says, essentially, excuse my language, go to hell, Treasury Department, you can't touch me, right? I write my own destiny here. Is he successful? Do you remember? Okay, is he successful? Does the CPA win? Does
Yes.
Ridgely win? Yes, he does win. Okay? Now, what is the logic here? Well, the court gives us the usual background, explains how Circular 230, Section 10.27 says this shouldn't happen, but is that regulation valid? Okay? Taxpayer claims, hey, I'm losing business. You shouldn't regulate me. And the court, beginning on page 92, once again, just like in the Loving decisions, says, okay, we have to review this. We have to see if the regulation should be granted deference. And once again, beginning on 93, we get into the issue of, hey, is this CPA representing the taxpayer? Because doesn't the statute demand for its application, the practitioner represent the taxpayer, but is the tax return preparer, is the CPA, is Ridgely, in other words, representing the taxpayer? And the answer is probably not, right?
So now contingent fees can be charged?
Well, the reason I drew your attention to Appendix J, right, guys, talks about the AICPA says you can't charge. See, personally, and I'm not sure how I'm gonna say something that I'm not sure. I'm not sure Ridgely, if he won the battle but lost the war, because maybe he prevailed against the Treasury Department, but his professional duties to the AICPA and the licensing board of the state says he shouldn't be charging contingent fees. So he won this battle against the IRS or the Treasury Department. Why can't you charge contingency fees?
Because you're motivated then to show higher.
Right, you're motivated to take more aggressive postures than you ordinarily will, and the licensing board of the CPAs says that's not a good thing to have overly aggressive practitioners, because then, we're not shown in good light in the public. So
The trick is to be a tax return preparer, but not a CPA.
apparently so, okay?
And
Apparently
then
so.
tell your clients to really overhold on their, pay stubs every 8 weeks. Come out of half.
John's point is, and V's point is, I'm not sure how the CPA here wins. Because, yes, ultimately they prevail here. The court ruled that Circular 230 doesn't apply, shouldn't apply here. But I don't know how the CPA skirts his professional responsibilities to the AICPA, which is adamant that you should not be charging contingent fees.
So if he hired people who were not CPAs,
But if they're under his control, then I don't think that gets it around this. Right? Do you? I don't.
But if you weren't a CPA, you could take the.
Well, that was John's point. If you're not a CPA, what's to stop you from taking contingency fees? And that's personally, if I were Congress, remember, if I'm a legislator and I want to be reelected, I want to try to pass legislation that's going to bring in revenue but not raise tax rates and things like that. Isn't one of the easier low-hanging fruit, like regulate tax return preparers in ways that they might be more compliant and end up where taxpayers are more compliant? And this way you could possibly raise more revenue without raising taxes. So I'm just sharing with you my own 2 cents. So in response to this, this court goes through the same exercise as the Loving decision. It looks at the word representative, says ain't no representative here. Looks at the word practice before the Treasury Department, says this ain't no practice before the Treasury Department. Talks about the context of Circular 230. Talks about the penalty regime already in place for bad tax return preparers. Talks about the history of Circular 230, which we already saw, and the history suggests it doesn't apply to tax return preparers. And when the IRS says, well, sort of on page 95, that the agency should win, the court does not find it compelling, and essentially it rules against the IRS. It says that, or the Treasury Department says that this rule does not apply.
So what about enrolled agents? They're in the same category?
I don't know, when you say they're enrolled agents,
I mean-
let's put it this way. The combination of the Loving decision and Ridgely decision makes Circular 230, about 40% of Circular 230 could disappear, right? Because it essentially says Circular 230 should not apply to any tax return preparation, right? So the point of these two cases, it puts into grave jeopardy whether or not Circular 230 applies in all of its facets to tax return preparation. All right, so I don't know, did I respond to your question, B? So
Yeah.
if you look at question 2-18, what provisions of Circular 230 are addressed by the Loving decision? Well, the Loving decision really addressed 10.34, right? 10.34 deals with standards with respect to tax returns, and we just said that you know, that may go by the wayside because does that have any relevance? And what provisions are addressed by the Ridgely decision? That's 10.27. We just said that may have no application, right? And then it says, if you wanted the index, look at subsection B, subpart B of Circular 230. If you look at subpart B, I'm looking at page 319. You can look through all these things and they may or may not apply. Because again, what are the parameters of Circular 230 if it does not apply to tax return preparation? It's not clear. So I'm not trying to make your Saturday morning or now Saturday afternoon I would say amorphous or tenuous, but it's very hard to know in the aftermath of these two cases where Circular 230 begins and ends. So in response to question 2-18, it's not entirely clear. And by the way, many of you, how many of you still, because habits die hard, how many of you in your emails, on your signature line, have, you still have that? Where it says that nothing said in this email constitutes something that will excuse you from penalties, right? Some gobbledygook language like that, right? Circular 230 was written, the pre-2011 version, to suggest you needed some language in your emails like that. But, you know, in the aftermath of these decisions, clearly, when you write emails to clients, Circular 230 has no, is that practice before the IRS? Should the Treasury Department be regulating your email exchanges between clients? You know, so you do not need those disclaimers that were once there. All right, so I'm just pointing out on page 96, the first paragraph says the implications of Loving and Ridgely decision may not be known for some time. Well, guys, there is not a bigger truism than that. We do not know the implications, all right? And you don't mind me saying that extends beyond just me, okay? Because no professor likes to stand in front of you and say, I really don't know what the implications are, right? But in this case, I don't. But that's universal, okay? So hopefully you don't feel shortchanged that some other professor would give you great insight at this juncture. I don't know of anyone. Problem 2-19. Ariana is representing Tommy Tycoon in a bitterly contested divorce, reviewing Tommy's financial records, including his 2014 and 2015 income tax returns, and a variety of financial statements from his employer and investment advisors. Ariana discovers Tommy received a stock bonus worth $150,000 in 2015 that should have been included in his income but was not. Okay? What actions is she required to take following her discovery of this omission?
She can amend the tax return.
She can. What is her first, what should she do first?
Talk to the client.
Gotta go out and talk to the client, right? Gotta tell the client, look, something was left out accidentally or intentionally, but you gotta fix it, right? So first thing to do is go to the client and inform the client you're not required to file an amended return. And let me just, this is gonna get to something that we're gonna look at soon. Gotta maintain client confidentiality, right? Pivotal. Gotta maintain client confidentiality. Does your answer change if Tommy tells her he just sold the stock in 2016 for $126,000? So would that change your answer? Because now he's trying to say, I mean, I'm not sure. I think he's trying to say he sold the stock. I'm not sure what he's trying to say. That maybe he has a tax basis and that he didn't have to report the entirety of the income. I don't know. What's your takeaway? Anyone have a takeaway for question B? What are the authors trying to?
He's trying to say that he's now, that as a result of that, he probably didn't claim the loss of his 2016 taxes, or is the year soon to be 2016.
What, you think the author screwed up with the year?
Well, no, I'm saying, like, does that mean that he now has to amend his 2016 taxes? It's a that's at a loss worth $150,000.
Oh, okay, I see what you're saying. Okay, so what the authors are saying, hey, you should can you now report a loss in 2016? That's what the authors are saying. Can he report a loss for 2016, guys?
Yeah.
Yeah,
He can-
but he has to also probably.
Well, you can't report a loss unless you took it into income in 2015, because then you're actually, you're perpetuating an error. So if you know that he didn't report it in 2015, you can't take the loss in 2016. You cannot sign that return. Right? You may have to withdraw from representation. If the this is one of those, sometimes guys, if the client doesn't amend a return, you can continue to represent a client because the new return has nothing to do with the old return. But if a new return is tied to the old return, you can't perpetuate an error. That you cannot do. If Tommy decides not to file an amended 2015 return, will Ariana be able to prepare his return for 2016? Will she be able to continue representing him in the divorce litigation? But before you shake your head, Viva, it depends, right? It depends on, maybe you could prepare the 2016 return if the Part B doesn't exist, where 2016 is completely on its own, okay? You know, can you continue to represent him in his divorce action? Let's put it this way. If you know your client has income that has not been disclosed, you cannot continue to represent, in my opinion, because then you're perpetuating a fraud on the court, right? So if you learn that your client has undisclosed income and is not willing to disclose it, you know, look, if there's a few $1,000s, I don't know, you're not going to lose, you're not going to drop out of the case. But if there's 100,000 plus involved here, don't ask me first, what's my number? I don't know what my number is. But there at some point, and you know, if there's de minimis unreporting, you know, who knows? But if there's some serious number here, and again, I don't know what that number serious means, and your client is not disclosing it, you know about it, and there's some record that everyone knows that you know about it, you gotta come clean.
Like, with that, are you saying that she can't represent in court in a divorce because of that?
Right, I think she
But
has.
I mean, with that mindset, then how can you be a criminal defense attorney for somebody, you know, murdered somebody if you're,
Oh, you don't know the person murdered.
well, say the defendant and you're, you know, preparing your defense.
The question is, you know, again, it's not a question of innocence or guilt. The question is, did the prosecution, I know this sounds semantics, did the prosecution prove their case beyond a reasonable doubt? And you may say mentally, hey, maybe my client murdered this person, but the evidence doesn't prove it. I personally couldn't do that, but criminal attorneys can separate themselves from that. All right, problem 2-20. Abel, a CPA with a varied tax practice representing Claude client in several federal tax matters, an audit of Claude's 2012 federal income tax return, planning for section 1031 like an exchange for an apartment in which Claude rents out all the apartments and in preparation of Claude's 2016 income tax return. Discuss whether the OPR, Office of Professional Responsibility, is authorized to initiate a disciplinary action with respect to the following matters. Abel provides incompetent oral advice to Claude about proposed section 1031 exchange. Now, this just gets to the issue of, does the Office of Professional Responsibility, vis-a-vis, right, when does the Office of Professional Responsibility get involved? It gets involved when there's a violation of Circular 230. But does Circular 230, should it apply to flawed tax advice? Is that flawed tax advice, is that practiced before the IRS? Probably not. What?
Not which judge you ask?
No, it doesn't depend on it. At least for now, the two cases have been consistent, that it does not.
So wondering how many cases are about to get appealed because of that, then?
Yeah, I mean, a lot of what this Office of Professional Responsibility, its charge has been extraordinarily narrowed as a result of these two cases. So in response to question 2-20A, your answer is probably can initiate a disciplinary proceeding, right? Everyone agree? Can initiate a disciplinary proceeding. How about incorrect written advice? Now, again, Circular 230 on the version that we have in Appendix A says the Office of Professional Responsibility can get involved, right? That if there's incompetent advice, can get involved. But now the taxpayer has two shields, not one shield, two shields in the form of Loving and the Ridgely decision to say, hey, can't touch this. I always get back to the, I know you guys are thinking the MC Hammer song, can't touch this, okay? You can play that today on YouTube. So I think in neither A or B can Office of Professional Responsibility get involved. Question C. Able provides Claude with written advice that the property taxes on the apartment building are only deductible in the year of the proposed exchange if Claude itemizes deductions. You know, again, I think we're 0 for 3 on the part, because all this pertains to tax return advice. Now, ultimately, Claude may be sued, right, for malpractice. Okay, so Claude shouldn't be, you know, opening the champagne bottles like, can't touch this, but meanwhile it's getting hit with a massive, massive malpractice suit. So put the cork back into the champagne bottle, but at least for now it doesn't have to worry about his license being suspended or censored. Question D. While preparing to meet with the IRS about a 2014 audit, Able discovers a serious error, Claude's favor, and Claude's previously filed 2015 income tax return, which has not been audited, but does not tell Claude about the error.
Now it's about to practice before the IRS.
Well, now there's, but we're getting closer, but again, he's supposed to, you know, again, tell him about the error, right? That he should file an amended return. That's under the code, right? The code says should, doesn't say must. But not gonna, you know, and that's the point of problem 2-20, I presume, is there's nothing here that says that you're gonna run afoul of the, in the aftermath of Ridgely and Loving, the OPR. And question E says same facts as D, except that Able discovers the error in 2015, Claude's 2015 return while preparing, while planning the section 1031 like-kind exchange. You know, I just want to point out, you may have problems with your licensing board as a CPA. You know, if you're doing something incompetently, your licensing board may censor you, suspend you, take away your license. But the Office of Professional Responsibility probably will not do anything.
Well, if he's meeting with the IRS, is that the
If
definition.
he's meeting with the IRS, we got
That
some.
is practice.
That is some issues.
Cause that's what it's saying though in D, it's about to meet with the IRS.
If you meet with the IRS, while preparing to meet with the IRS, that is practice before the IRS, and then you do have issues
Right.
concerning. So you're drawing them to my attention. John's right, for your notes for problem A, you
D.
probably do have exposure. D and E, you're right. D and E, you probably do have exposure. Just so that we, how do we say, keep the flow, why do we hold in abeyance problem 2-21? Because this way, it gives me an excuse to begin next class with 2-21, so we transition hopefully from chapter 2 to chapter 3. Hopefully I can pull off that beat. Hear me on this, assuming we have, my guest speakers, generally they're very good, but things can always happen. What I mean is Bob Stern, who's supposed to be your guest speaker, could be pulled away last minute. If he is, let me say, if he isn't, let's just keep our reading, I'll call it light, up until page 125, if he's able to come. But if you get an email from me that he can't make it for whatever reason, I will shoot you an email. We'll have to read up to page 150. But he's very good. He's very punctual. I expect he'll be here 7 o'clock on Wednesday. Page 125 for now, okay? So thank you for coming on a Saturday morning. I will see everyone